What could a rising dollar mean for the UK property market? The dollar is trading at 20-year highs against the pound, but why? Firstly, aggressive monetary tightening by the Federal Reserve has increased interest rates faster than the Bank of England, which has increased the global demand for dollars. But secondly, as the world's reserve currency, the US has safe haven status, and with the current uncertainty surrounding the Russia-Ukraine war, China's lockdowns, as well as a general global economic slowdown, countries are wanting to hold more dollars to weather potential economic shocks, pay for imports, or service national debts, all of which drives further demand for the dollar. Conversely, the pound has been weakening due to high inflation, soaring energy costs, the same geopolitical issues, but also the financial market's lack of faith in the UK government, who recently aggressively started selling off the pound in response to Liz Truss's emergency mini-budget. So how could a strong dollar and a weak pound influence the UK property market? Firstly, a falling pound means people's money won't stretch as far when paying for goods and services imported from overseas. This means commodities like oil and food will become more expensive in real terms. Almost 50% of Britain's food is imported. Shopping becomes more expensive if buying products from overseas. So if people's living expenses are increasing, it becomes more difficult to save for a deposit or pay for the much higher cost of mortgages today, both of which could have an impact on the amount of buyers in the marketplace. And with fewer buyers, we're unlikely to see further aggressive house price growth. And secondly, a weak currency can exacerbate inflation as it makes importing goods more expensive, which is very important for home builders who are seeing rising costs and their margins squeezed. In 2021, China was the main trade partner for construction imports into the UK. That year, the UK imported nearly £4.3 billion worth of construction materials from China. So if construction costs become more expensive because of the weak pound, we could see development schemes being shelved or increase their asking prices, which again adds fuel to the fire of buyer affordability. However, while the benefits of a weak pound are difficult to see from a UK perspective, US investors with cash to spare are beginning to invest it overseas. So high value areas such as London are becoming some of the more sought after locations across Europe for American investors. The reality is the fall in the pound suggests we are entering into a period of poor economic growth. And with persistently high inflation, we could be entering a prolonged period of stagflation, which would easily offset any benefits created by a weak currency. And housing markets generally do not perform well in such environments.